everyone, this is Nikki Yu, also known as Faces Trader, and you're watching the Awesome10X Global Market Update. It's a Monday, April 26, 2021. So happy to inform you that over the last 3 days, the US market has been rallying, right? So you've seen a lot of companies go up 90%, 100% actually. So let me show you those specific companies that I am talking about. So your micro caps actually rallied quite high last week in the last Wednesday, Thursday, Friday after being oversold for quite a while, specifically the drones related sector. Let me show to you what exactly am I talking about. So Alpine has rallied from 2.4 to about 3.6. That's a 50% move. Take note that for this week, I think that although the market can continue higher and Europe can continue higher, you might see some resistances within this area from about $4 for Alpine all the way to 4.76. Let me show to you just a brief understanding in each sector. So for the drones, Alpine, 50% move up. You're seeing companies like Plymouth Rock also rallying from a very oversold condition after dropping 80%. What a magnanimous 100% move. This was rallying from a low of about 30 cents to as high as about 56 cents. I'd assume that in the next 2 days or even tonight, you'll see resistances for this Plymouth Rock here about 67 cents or the highs of April 5 or even the highs of this March 23. And although it can go higher here at about March 11 areas of about 80 cents, I'd say that those are topish areas for resistance zones rather than for buying. So be a little bit careful this week. I'd say that this week is more of a selling zone after that huge oversold rebound in the last 3 days. You're still seeing your stocks in a choppy market. Let's take a look at your OTC names. Take note what happened. ABML, after dropping 80%, take note from about $5 all the way to $1 or 80% drop. This move to about 190 is a significant 100% move. So from $1 to $1.90, if we reach about $2 to $2.20 tonight, I'd say that it doesn't matter if your cost was about March 9 areas of 220 or you averaged down somewhere here or you bought somewhere here. I'd say that as you could see, this is still a definitive downtrend and you don't go from a V-shaped reversal all the way to $3 to $4 without expecting resistances. No matter how good a company is, there will be resistances. So in the short term, take note that this 220 is a resistance, which is a 140% increase in just a single week. The next time that there will be a higher low here, that's where you'll see supporters. Perhaps if the market will consolidate in a bullish format, take note that ABML should perhaps get supports in the next round here about 160 or 150 and then a resistance still here at about 2.8. So that's about February 25 areas, about March. You'll notice that this has been a lower high. And so expect resistances in these levels. February areas are actually your when a company is making a lower high from the January to February, if it has peaked quite early before February 15, it tells you that this company is is a faster mover. Take note how fast it were from $1 to $5. That's a 5x move in just a single week. So this is really often doing such huge moves. I won't expect this to hit $3, but if it did, even if ABML does go up, I'd say that there are more sellers rather than buyers. So just be aware that this $2 to $3 tonight or this week is more of a selling area for ABML. You should also take a look at what's been happening in your micro caps. AITX rallied from as low as 5 cents all the way to about 10 cents, even as it rallies about 12 to 15 cents tonight or next week. This should be seen more as a resistance zones rather than a buying zone. So last week was the buying zone. This week is perhaps a selling zone. What's happening this week? Well, you've got a lot of earnings. Let's show to you the earnings happening this week. You've got Tesla, you've got Amazon. So this week is your big names actually. Let me show you from earnings whispers. This is where I take a look at the best ways to see what's happening for the week. So for this week, like this Monday, you'll see Tesla reporting. That would be something that everyone's going to take a look at. You'll see this week, you'll see Microsoft, Pinterest, Alphabet, Visa, and AMD, Enphase, Starbucks. These are your huge companies reporting numbers. People will also take a look at Raytheon Technologies. You'll see the market discuss Apple, Facebook, Qualcomm, Teladoc, Logitech, ServiceNow, Spotify, Shopify, Boeing. Very strong companies reporting this week. Humana will discuss about doctors in demand. You'll see how Amazon, Neo, Twitter will discuss as well this Thursday. Domino's Pizza, Bristol Myers, McDonald's, and then lastly, in the last part, I'd say L3 Harris, which is an AstraZeneca, Colgate Palmolive. You'll see these companies. Everyone will be listening in their earnings report. At least these companies would have a lot of highlights and headlines. So this end of the week, 26, 27, 28, 29, 30, before this month ends, you've got all these companies reporting their numbers. Let's take a look at where the market situation is while they're reporting numbers. Despite how good you think Tesla, Alphabet, and all these Facebooks are, take note that it's reporting earnings at a particular time where the market is actually in the make or break zone. Your Tesla here about 760 is actually a rally back to their prior resistances. Although I think that Tesla would have great numbers reported this Monday after close, you'd see that the market could actually sell in the good news just like what it normally does. So be more careful this week rather than being positive, seeing a good news and a good headline. It's possible that Tesla will break above 760, can even go to as high as $800 tonight. But I'd say that people would actually take some profits in these areas. Now, let's say Tesla didn't surprise on the upside. There's a lot of buyers, however, here at about 660 or 650. So we'll see. Take note, AMD will report their numbers this week. And this week, it's an earnings week. Everyone will probably take a look at how AMD is going to give their outlooks for this year. We'll see. So far, it's very clear that AMD is still in a consolidation zone. It doesn't break 90, but it doesn't break 75 either. How about Alphabet, which is AKA Google? Still doing all-time highs. The market has obviously paid a premium to Alphabet. Could see that from around March 2020 until today, market still hitting all-time highs for Google. We'll see how good the numbers are later this week for Google and Facebook. The market's paying a lot on their cloud services, Google Cloud, and digital advertising of your YouTube. It's very important to see how all these numbers will translate. If strong numbers on Google, Facebook will continue going higher, understand that your NASDAQ then could potentially break above 14,000 if the markets will continue to go up for your Facebook and Google and your Microsofts, which are reporting this week. You might see hit another all-time high for your NASDAQ. How high can it go? I'd say that if the markets do go up, it's limited, however, to about 5%. So why 5%? We're talking about an extended zone for the entire market already. This is your Microsoft hitting all-time highs, just like Google. So when it comes to the Facebooks, the Amazons, the Googles, these are the ones that are helping our index go all-time highs. Your Apple, take note, this is an all-time high, but any announcements would actually trigger potential higher movements. So in case you're wondering what's hitting the markets at 14,000 NASDAQ, look no further. That's your Microsoft hitting to the all-time highs of 260. It's your Google at about 2,315. It's your Facebook nearing this, well, it's not yet all-time high, but it is near that, 314, 315, this 305% away. But typically, guys, when I see the market voyeuring in the mega caps or the mega Charizards, as I like to call it, it's actually a question today or this week on whether the market will keep on overpaying or keeping a premium to these mega Charizards. So this week, I'd say that we are in a very, we are still in a very volatile zone. In terms of volatility, take note that the highest volatility so far is still in the realm of cryptocurrencies. So what's happening in cryptocurrencies is a function of how volatile this entire market is. Take note that BTC, after crashing to 48,000, is now at 52,000. Ethereum from 2.3 is now back to 2.5, 10% up. Similarly, with BTC and Ethereum going up, a rising tide lifts all boats. Take note that your Bitcoin Cash, your Ripple, your Dash, your Litecoin, Ethereum Classic, Cardano, your IOTAs, every particular altcoin is rising 12%. Now, just because these cryptocurrencies are rising doesn't mean that we are off the hook, that there are no resistances. Take note that all of your crypto-related miners are actually in a double top or lower high. This is hot mining, which actually just does a lot of hash rates, right? So I'd say that if you've been buying it at $9, you'll still have to cut it at 8 to 7.5. Rallies on an uptrend on your hot mining will be sold. And I think that the buying pressure is still somewhere here at $5 and $5.50. So far, you're seeing that the crypto-related names and the crypto stocks are not really in tandem. This is what's happening with your hot mining. Let's take a look at your big farms. It's actually in a downtrend. I'd say that given this huge downtrend, if you bought somewhere at 6 for your bit farms, seeing that Toronto Stock Ventures has a lot of crypto-related digital assets listed, I'd say that you want to buy it back lower. So here at 450, even if this rallies tonight about $5.50 with the surge of your cryptocurrencies tonight, understand that when it was January, February, March, your bit farms never actually hit all-time highs, even as your entire cryptocurrencies are going up. So there's a dichotomy, and that's a decoupling happening in the stock markets of the crypto assets and the entire cryptocurrencies itself. So this symmetrical triangle actually was punished all the way to the downside for bit farms, which means that yes, the bears still control this. In a way, it could be two things. Either the stock markets that are handling crypto assets are less volatile and more of I'm not sure if it's it's a different float alternatives, but essentially what we're seeing is that given that there are certain resistances with your crypto-related stocks, it would seem to say that your crypto-related assets might actually be more of a volatile era, but it's actually just still in a selling range. So assuming that you haven't taken profits, you actually want to be using these increases in cryptocurrencies to be more of a cautious state. Be cautious because although this can rally further, I'd say that there's important resistances happening. So resistances are happening. These rallies could be short covering. And if you're short them, I'd say that you want to hold into your shorts first and actually wait it out. So here in my eToro, I'll be sharing to you that what I've done is I have a Christmas tree type of market. I've got some longs, but I've also got some shorts. Why am I shorting your wind and Siemens Gamesa? So these are actually wind-related companies. I'm shorting them not because I don't think that the wind energy is not gonna do well. In fact, I think that it's a 10x trend. So I could be wrong, but seeing that the market right now is actually more of a consolidation. 87 dropping back down here to about $60. This is a rally in my view that is more of a retracement rather than a bullish V reversal. So here about 74 areas for your Vestas looks to be more of a resistance point rather than a support. Now Vestas is listed in the US as BW Dry. That's why you saw the OTC, but this is actually the one that is in that's more in the, I'm not sure if this is in euros or is it in NOKs. I think this is in NOKs, Norwegian kroners. Either or, yeah, I think mostly it's in the London. Anyway, it's Europe. So Vestas wind system is in Norway, so it could be in Norwegian kroner. So this one, Vestas right now is actually more in the resistance zones. Although this can rally to 1.4, take note that this is more of a cautious zone rather than on a euphoric zone. With BTC USD, just in case you're wondering, you could see that these areas are still very frothy. I think a technician should see that this is already consolidation. So a better way is to see how BTC will move on the way up to 56. Will it break above 56? Will it go back to 60K? Either way, whether the chart is a range, you could see it's very clear. If 48,000 is a support, there could be resistances here about $60,000. We're still not away from the woods. Your IOTAs, your ADAs, let's take a look at them. So it's all in the very much range-bound reasons. ADA hasn't broken this 136, 140, although there was that rally to 150. It was short-lived and then went back to $1 and even as low as 90 cents. These movements are critical because you could see that for the last 3 months, these buyers are not necessarily in the green. They're mostly in the accumulation or in the distribution zone. If you were a betting man, I'd say that the betting man will assume that this $1 to $1.50 is more of a resistance zone. It's more of a distribution zone rather than a buying zone. So where will the bulls actually start to assume, or the bears actually start to give up? When they see this going all-time highs. If you're bullish, yes, Ethereum is the most bullish currency in the market. You could see that this even hit all-time highs last week. Unlike BTC, that's actually breaking down to a lower high, your Ethereum actually went to a newer high. From February to April, this went into an all-time high, particularly in the NFTs. So it's possible that the NFT blockchain using Ethereum is very successful. That's why there's this divergence on the overall crypto market. While there's one stock, or rather companies that are very much divergent, the divergent in a bullish format is actually in the Ethereum. So if you're bullish, this is still very hugely bullish. Notice that the prior resistance here became your first support, and the drop was actually muted still above $2,000, necessitating some people to assume that, hey, maybe 2.6 for Ethereum is going to break above, and any shorts will probably cover about 2.2 or 2,100 for Ethereum. So this one is still a question mark for the bears, or for the bulls. Actually, this is still a stronger format rather than the other names. What do I mean stronger format? Because the other names have already been deeper. So in a way, because we look at stocks in a VC format, it seems to be that crypto is also in a VC format. So how it drops and moves will be similar to how penny stocks and microcaps move. Given that microcaps have fallen mainly 50 to 80%, it is possible that this first drop of 50% is a rally to actually sell into. So not all stocks are the same. Take note that not all stocks are the same. This one can rally further. XRP can rally. After a 50% drop here, a rally to about 130 or 150 is not out of the picture, but that one is perhaps more of a reason to sell for the next lower high. So just be careful about the companies or the cryptos. It's not all the same. What do I mean? Digital asset, example, Neptune Digital Assets looks like it has stopped here. Example, 220 drops $1. Although this is rallying after that drop, take note that any rallies here to 140 might actually be a resistance to sell into. So we are more cautious rather than being bullish, as we think that there are some tops that cannot be avoided. So more of like just be a little bit cautious. You can see that fintech, these are resistances to sell into. If your YECA rallies about 79, that is more of a resistance. Perhaps other people have started to sell here at $70. Every 50% drop will have resistances, and that rally doesn't just move up to new highs, not as quickly as you may think. So it's an individual zone. It means that for crypto and futures of fintech, although PayPal CEO have discussed that there's a huge interest definitely in crypto holdings, I'd say that it is supposedly gonna be in a trading range. So you might not be bullish, but you might not be bearish because it's actually more of a neutral range. Now, however, there are companies that are deeper. That's why for other names, you have to be more of a bearish state. So Ethereum, I can understand the bulls there. BTCs, it's more neutral. There's still bullish action there. But there are ADA is still in a bullish state, but Ripple doesn't seem to have a lot of buyers. Let's take a look even on other cryptocurrencies. Example, you could see that when it drops further, It's more of it's more bearish than bullish. Take note, what 0.18 all the way to 90 cents. This has been, I'd say, the catalyst was really profit taking after seeing, of course, your Dogecoin dropping 50 to 60% as well. So you have to be careful on big drops like these. It's actually a sign to sell at a lower high rather than to be bullish and neglect taking profits. So you don't want to actually have your gains wiped out, given that it could really fall very quickly. So it's more of be cautious, right? You don't need to sell if you don't want to, but be cautious. We don't think that this is a situation where you have to be aggressive. In fact, the aggression has to be tamed. Take note, 1-2 all the way to 700. These drops does not mean that there's no resistances created. There are actually resistances. For Bitcoin Cash, it's possible that $960 here is a resistances. So a 20% or a 30% rally is not something to be saying that a recovery is on the way. It's actually more of a reflexive bounce that is more of a characteristic actually of bearish action rather than just simply bulls. So take note what's happening. If you are looking at the blockchains that are listed in the market, example, Riot, Mara, these are actually opportunities to sell. If Riot rallies about $50, I'd say that these are your resistances to sell into. If you also want to sell positions, these are a sell area. So Riot at about $57 is gonna, or even at $50 will be a great resistance to sell into. Mara, another resistance to sell into. This would be resistances. So when you see me posting a lot of arrows, you should be more on the cautious state. The trade to make is on the selling zone, not on the buying zone. Mara, Riot showing signs of weaknesses, MSTR perhaps showing some signs of weaknesses. So these supports, because it's already at 600, might actually bounce to 720 for your MSTR. But rallies this week have to be more of a careful zone. You want to be more still on the bullish zone. If it's dropping further, we're talking about being bullish on a 70% drop, not on just a 50% drop. So this isn't as oversold as you may think, considerably, because it has rallied significantly too. From about $100 to as high as $1,300, you may necessitate some selling pressure rather than buying pressure. Everything that you want to watch this week, other than the earnings palooza of your big caps, take note that there are companies that have rallied because I would imagine that Cloudflare actually partnered with NVIDIA. Nonetheless, these rallies of strength, you have to be more cautious of. I'd say that this week, even as Cloudflare continued to be very strong, you'd see this $83. I'm more of a sell on the highest that you could do. Be careful because we are seeing actually lower highs even as the Nasdaq is a betrayer. Why is the Nasdaq a betrayer? Because your Nasdaq 100 is primarily composed of your FAM gas. So you only need a Microsoft to have a bad news to suddenly make the market actually collapse. Take note at the map here. I'll show to you. This is your S&P 500. You don't look at the one-day performance. Let's take the year-to-date performance. The reason why the Nasdaq is holding up their year-to-date performances is because obviously the highest market caps are very strong, particularly your Google 30% up, your Facebook 10% up. Most of your social media advertising, your technology names are significantly up. So you need to actually watch. I just say that for this week, just be just put a watchful eye on how these FAMGAs will react on good news or bad news. I want to know how these would do, especially after a significant one-year performance as well. Take note, 50%, 100%, these are easy to take profits from, especially if the market is in a cautious zone. The BTCs are actually reflective of the risk indicator Jerome Powell is going to discuss this week. So you want to be watchful this week rather than very bullish. So more on the be careful and on the selling side. All right. Thank you very much. And if there's no questions, I hope that we see you again tomorrow. Bye-bye. Thanks.